So today we will start with question number 9. Question number 9, here three partners are there. Pratik, Rocky and Kaushal. And their PSR is capital. So capital PSR means 3:2:2. And this person is going out. So his will go and new PSR, new profit sharing, new PSR will be 3:2. Okay, it will be 3:2. And here in the question, you have to prepare general ledgers, you have to prepare journal and Rocky's capital account. So first we will start with Rocky's capital account. Rocky's capital account. This is your credit side. Whatever his payment is due to him, we will write to this side, and what is to be recovered, we will write this side. So here all entries are by balance brought down. By balance brought down, his balance is 20,000. So we will write 20,000. Okay. Now next is general reserve. Of course, every entry will have by general reserve, and he will get how much here? 3,2,527. It means he will get 2/7 of the general reserve. Here general reserve is 16,000. So general reserve 16,000 into 2/7. So it is not divisible. We will divide manually. 7 divided by 32,000. Chalk. So this will be his general reserve, 4,571. 4,571 will be his share. Now, other items receivable by him in the balance sheet, nothing is there. So now we will go by account standing to the interest on capital at the rate of 5%. By interest on capital at the rate 5%. 5% of this amount means 5 to the 10. 1,000 he will get. Share of goodwill on the basis of twice the average of the past 3 years profit. Here, this person died on, this is important, died on which date? Died on 30th June 2020. 30/6/20. He died on. It means 3 months. April to June, how much? April to June from 1/4/20. So it comes to 3 months. So all this years he will get for 3 months. 5% for 3 months he will get. It means he will get 250. 250 he will get. Because it interest 5%. 5% for 20,000 for 3 months, it will be 250. Okay. Now his we will calculate his goodwill. Goodwill to be calculated on the twice the average of past 3 years profit. Past 3 years profits were 12,000, 16,000 and 14,000. 42,000 divided by 3, it comes to 14,000, and twice it is average, and twice purchase means 28,000, and his share, it is firm's goodwill. This is firm's goodwill. His share will be 28,000 into 2 by 7. His share is 2, so he will get, total is 7, so he will get 2 by 7. 7 4 the 28, 4 2 the 8,000. So how much he will get by goodwill? By goodwill, he will get how much? He will get 8,000. Okay. Then his share of goodwill on the basis of profits will pass the necessary journal entry. So here, whatever balance is there, it will be given to his executors because he has passed away. So to Rocky's executors account, and whatever the balance will come, it will be to his wife. Goodwill, interest on share of profit from the closing date, share of profit from the closing last financial to the date of death on the basis of last year's profit. Means last year's profit, it was 14,000. Last year profit was 14,000. He has to get the share for 3 months. So for 3 months, 3 by 12, he will get, last year's profit was 14,000 and he will get for 3 months, 14,000 is for the full form. It is of the form. So his share will be 14,000 into 2 by 7. By 7 if will cut, it will come 7 2s are 2 to the 4,000. It is his share for full year. It is of full year. Now for 3 months. 3 months it will be 4,000 divided by 12 into 3. So it will 4 and 4, 1,000. So he will get profit share equal to 1,000. So profit and loss adjustment account, 1,000 rupees he will get as a profit. Now his total is 1. Start. So this is the executor's account. Executor will get this money. Now you have to pass the journal entries. As per the ledger is over, journal entries. So here we will make the journal entries. So after this, you can at a one time also you can pass the journal entries. All are the credit entries. So because it denotes debit. So we will write debit, general reserve account debit 4571. Then interest on capital account debit 250. Goodwill account not goodwill account, because this goodwill we have to recover from this P and K. We have to recover this from P and K. So 1 minute we will change here. We will change this entry goodwill and we will distribute it. Goodwill 8,000, P and K. P and K are the remaining partners, so they will, because this is new PSR and it is not given in the question, you have calculated, and no helping anything is given how it is to be calculated. In such a case, by default their gain ratio and new PSR will be the same. So this 8,000 we will divide among P and K. P will 5. Total is 5. So P will has to pay 3 upon 5. 16 5 80. 16 32 48,000. And another he will get 2 upon 5, means he will give 16 2 16 गुना 8, so with 7 48 16 गुना 32, 32,032. So here we can write P's capital account and P's capital and K's capital, and this is your goodwill. So GW we will write for our knowledge sake, and we will write here two amounts, 4,800 and 3,200. Now this portion is now over. So here interest on capital is debit 250. Now P's capital account, P's capital debit 3,200 and K's capital debit 4,800 and K's capital debit 3,200. PL adjustment account debit 1,000 to Rocky's capital account, Rocky's capital. Okay, account is not written before the names. So this total will come to 1 5 7 12 का 2 आया 1 5 6 2 8 8 16 18 का 8 आया 1 4 का 5 4 9 3 12 13 का 3 आया 1 13 33 820 and 33 800. So this is one by one general entry. Here we will write the narration. Okay, and whatever you have done, you write a narration here. So this journal entry is also over. Your ledger is, this capital account is also over. The by one entry, you can, after making this by one entry, it will be over. Okay. Now we will go to the next question. At the end, one more entry you can do. Whatever balance is Rocky's account, you can transfer to his executor's account. So what will be the last entry? Last will be entry will be Rocky's capital account debit to Rocky's executor's account, and all the balance will be transferred to his account. That is so all balance will be transferred to his executor's account. And with this, your 9th question is over. Now we are going to question number 10. We are going to do. Okay, and question number 10. Here three partners are there. Bajaj, three partners are there, and their ratio is, three partners are there, Narang, Bajaj and Suri and Bajaj, and their capital ratio is 1/2, 1/6 and 1/3. We will convert it into a ratio. For making it in a ratio, we have to first take the LCM. LCM is 6. So 2 divided by 6, it comes to 3. 6 divided by, it will come 1, and 3 2s are 6, so it will be 2. So their ratio is 3 was. The ratio was this one, old ratio. Now Bajaj retires. So new PSR profit sharing ratio will be 3:1 if in the question nothing is given, कि his share is how it is being divided. Okay. So in the question, preparedness, here you have to adjust the capital. First question, this is, and then draw the balance sheet, ledger account, balance sheet, everything you have to prepare. So first we will prepare revaluation account. Here they have not given how the ratio is to be calculated. So you have calculated and this will be their gain ratio also, because in the question it is not given. Okay. Now we will prepare the revaluation account first. revaluation account. This is your credit side, this is your debit side. Okay. So freehold premises in stock to be appreciated means they has to be increased. So assets are by default debit. Assets are so if you make that account debit by more amount, it will increase. So appreciate, it will appreciate. So premises account we will debit. So all debits are written by buy. So by premises we will write. By premises we will write, and premises is to be appreciated by 20%. 40,000 it is given, so 20% will come to 8,000. Okay. And stock, by stock 20,000 it is also to be appreciated. Stock is 22,000, so 4,400 it will become. 4,000, try to put a comma always. Appreciated. And 15%, sorry, it is to be appreciated by 15%. So 22,000 and 15% means 3,300 it will come. 22 and 11, 32, 33 it comes. Half is 11, 22 half is 11. Machinery and furniture to be reduced. So debit items to be reduced, it means we have to write those items with 2, with credit sign. To machinery. To machinery. Machinery we have to reduce by 10%. By 10% means 3,000. 3,000 rupees machinery is reduced. To furniture. Furniture is to be reduced by 7%. Furniture 12,000 is given, 12 7 840 it will come. Okay. Machinery and to be bad debts is to be increased to 1,500. Already 1,000 is given, 500 to be increased. It is a liability item. That's why in the balance sheet asset side it is by minus sign. So it means it is a credit item. Because it is minus sign, it is a credit item. To increase the credit item, we have to make more credit to this account. So we will write to provision for bad and doubtful debts. By 500 we will write, and it will become 1,500. Okay. Goodwill valued at 21,000 on Bajaj retirement. Goodwill of the firm. Firm's goodwill. Firm's goodwill is 21,000. Okay. So Bajaj share will be how much it will be? 3,144 or 26. Total is 6. So Bajaj share will be 2 upon 6. 1 by 3. And by 3 we will cut, it will become 7,000, and it will be given by NSS. So it will be given by Narang and Suri. So Narang's share will be 7,000 into 4. So this total is 4. So Narang will give 3 by 4, and Suri will give 7,000 into 2 by 4. Okay, 2 by 4. So his share will be 3 by 4 and 1 by 4. 1 by 4 means by 4 if you will cut it. By 4 if you will cut it, it will become 1750. So 1750. This is the breakup for goodwill. It is for the goodwill. When that portion will come, we will write. Okay. The continuing partner have decided to. Okay. Now here, but we will now go to the answer, because no more entries are there. So 300 Part-8 311, 11,300. So 2 profit transferred to capital account in old PSR. In old PSR and Narang, Suri and Bajaj, how much they will get? They will get 0. 6. So 6960 into their old ratio was 6, so 3/6. So we will cut 6 under 6, 6 under 6, 6 and 36. Okay, 3 4 8 0. Narang will get. Suri will get only how much? Suri will get 1160 because his share is 1/6. So he will get 1160. Okay. And now Bajaj how will get? He will get 2/6. Means we have to double this amount. 0 and all total should come. 14 plus 3 4 4 5 3 So this is your N. S he will get 6960 into 1/6 means 1160 will come, and Bajaj will get 6960 into 2/6. It will come 2320. This we will cut. It will 1160 multiplied by 2. So this they will get. Now this profit will be transferred to their capital accounts. Now we will prepare the capital account this side. Okay, this will be our help. You have to prepare necessary general accounts. And now capital account. Main work is in capital account because capitals you have to adjust. Capital account. Goodwill I have written out, I have wiped out. So goodwill I am written here. Goodwill distribution. Okay. So goodwill we will write here again distribution. So capital accounts we will prepare. Okay, this is your credit side and this is your debit side. Okay, and in the first balance, by balance, their balance is Narang, Suri and Nida, 30 and 28, 30,000 and 28,000. Then next is by reserves. Reserve is 12,000 and we have to distribute in this ratio. So 12,000 if you distribute by this ratio means reserve. 12,000 into how much their ratio is? Old ratio is 3:1:2. So 3/6. It means 6 2 and 6,000. Another is 1/6. So 1/6 it will be 2,062. And another one is 2/6. So 6 2 2 2 4,000. Okay. So reserve is 6,000 and 2000 and 4000 and 4000. This is your N, this is your S, and this is your B. Okay. Narang, Suri and Bajaj, and this person is going out. This person is going out. Okay. So now after balance sheet, item balance sheet, nothing is more to be. Then PL's this profit by regulation account, the reserve account, 3480 and 11602320. Okay, so this profit has also come. Now by the goodwill, by goodwill. So N and S will give. So N's capital and S capital, because their capital accounts will be debited by 5. It will come to his account because he is going 5250 and 1750. Okay. So 1750, and it will be debited to this side, to B's capital. B's capital, N will give 5250 and 1750, and here nothing will come here. Okay. So their profits has come. So now in the question, these two partners has to adjust their capitals in their new profit sharing ratio after retirement of Bajaj. After retirement of Bajaj, they are going to, not before, after retirement of Bajaj. So Bajaj retired on, and Bajaj retires on which date? Bajaj date is not given. It means the date of the balance sheet they have retired. He has retired on date of the balance sheet, means on 1/4/20 here retired. Okay, or 31/3 also you can tell he has retired as from the firm. So now their capital account is to be adjusted. Okay. Now we will make a total of this side. Okay, and same total we will write to this side. So this person is going out. So if nothing is given, his balance will be converted to his loan account. So first to Bajaj's loan account. Bajaj's loan account will be 41,320, and his balance is nil. So we will write to balance carried down. Only these two will come here. No balance will come. So here from this total we have first made a minus. Okay. Now this balance will come down. So by balance brought down. Their remaining balance is this much after his retirement. After retirement, this is because this person's loan account we have made. So after retirement, the position is 3420 and 31410. Now this they want to adjust. They want to adjust in their the country might decide to adjust their capital in the new profit sharing ratio after if and in their new PSR, means 3:1 it should be, and whatever difference is there, it should be adjusted through their current accounts. Okay, so this portion is now over, so we can wrap this. Now the total firm's capital is 34,230 and 31,410. Total is 065. This is firm's capital. Now we will distribute it there. New profit share ratio means Narang's share will be 65,640 into 3 by 4, and Suri's he will be 65,640 into 1 by 4, and whatever the difference is there, here the difference is there, we will adjust it through their current accounts. Okay, so रकम 4 तो 25, 4 से 24, 4 चौक 16, रकम 4. This is his balance 16,410. His capital will be this much, and his will be 3 times. So 3 times is 0, 3, 3 चौक 12 का 2 हाथ में 3 6 18, इसका 9 हाथ में 3 और 4. His will be this 49,230. So 4 2 6 9 54. So we will write this balance to this side, and whatever the difference is coming, it will be adjusted through there. So first it is 34, but he has to give money. So by current account, by N's current account, we will make it again how much? 49, because we want a total. His balance should be 2 balance carried down. His balance should be 49,230. 49 after adjustment of capitals. So 49,230 should come total. So here 49,230. So 15,000 will be transferred to his current account. Okay. Now this person, his balance should come to 16,410. It means, but this side is already higher side. Here nothing will remain. Okay. So it is higher side. So higher side total will go to this side. 31,410. So here this one 31,410. 410 is okay. 6 5 11 का 1 हाथ में है 3 3 15,000. So it will transfer to his S current account. Okay, this much will be transferred to his current account. So by this way the question will be over. Ledger's account, balance sheet, current account will be over. Now they want the balance sheet of the new form. Okay, so balance sheet of the new form we will prepare. Balance sheet. Okay. So here you try to make the items in serial order. Bills payable, no changes. So 12,000 will come here. Okay. Then creditor sundry. Creditors are 18,000 and no changes. Then reserves we have already distributed, it will go out. Capital, but before capital account we write P's loan, Bajaj's loan account. Because now its capital has gone, it has become loan. 41,320. Then capital accounts of Narang and Suri. Narang and Suri we have calculated capital account balance 49,230 and 16,410. So 49,230 and 16,410. 0 3 1 4 4 2 6 9 6 15 5 7 2 4 and this side is over. This side is over. Now we will go to the credit side. Okay, and credit side we have to remember all the adjustments. So first is premises. Premises we have appreciated 40,000 plus 20%, 8,000 we have appreciated, so it will become 48,000. Then machinery we have depreciated. Machinery is 30,000 and we have depreciated machinery by 10%. Means 3,000 we have depreciated and it will become 27,000. Okay, third item is furniture. Serially you go, then you will not make a mistake. Furniture, it was 12,000 and we have depreciated furniture by 7%. 7%. 840. Okay, furniture is depreciated. Then stock. Stock was to be appreciated by 15%. Stock was 20,000, appreciated by 15%, 3,300. So it will become 22, 25 and 300. Okay. Then the debtors will come. Debtors was 20,000. Minus provision for bad and doubtful. We have increased it to 15%. So 15,100. So it will be 18,500. This amount will increase by 500. In the question, and then your cash comes. Last entry is cash 7,000. Okay. And now this current account, you should not forget current account. So here current account is in 2, means it is a credit item. So here we have to write Suri's current account. Suri's current account. I have forgotten Suri's current account. 15,000 will come to this side. Okay. Suri's current account. Here we have written by and current account. By means debit. So in the debit side, all debits are this side. So N's capital account means Narang's capital account. Capital account 15,000. It will come to this side. We should not forget this. Now the total is. So it is okay. It is okay. This balance is okay and current account is also okay. So now this chapter is over. Thank you for watching our video. Please share with your friends and tell them to subscribe also. Thank you. Now we will go to in the next video we will come with your dissolution of partnership. Thank you.